Hi, I'm Adam Sussman, Director of Research with TABB Group. I'm here with Matt Simon, Analyst at TABB Group. And Matt's been working on the hedge fund report. And one of the things that we found was that among funds that lost money last year, 73% of the assets were due to market losses, and 27% were due to investor outflows. And to me, Matt, that just seems to make sense, because the reason why people pull money out of a fund is after performance has already been lost. So, just by the very nature of the market falling or the performance falling, and when the investors would pull the money out, it seems inevitable that it would be 73-27 in favor of market losses. Do you agree with that, or is
I think there's some things there that you have to consider. One of the things that you have to look at is investor gates, in terms of some of the hedge fund managers that we talked to over the last year had policies in place where it didn't allow their investors to redeem their money, and because of that, it artificially inflates the assets under management left in the industry.
So if those folks were able to take the money out, then maybe that investor inflow percentage would have been much higher, I guess.
Yeah, I think that would have, but I also think that we also saw a lot of pressure by the investors to try to get that money back, and from the liquid strategies that they were able to get the money from, they were taking money out as quickly as possible.
So now, what's your sense on where hedge fund assets are going to go? Right now we're at about 1.43 trillion. Some folks are saying we're going to get back to 2007 levels. Mm-hmm. Some folks are less optimistic. What's your feeling?
Yeah, it's a good question, Adam. I think what basically happened is we saw a big drop in the performance, and we saw a lot of outflows like we've been talking about. And to get back to those 2006, 2007 levels of 2 trillion, there's going to need to be a lot of inflows by hedge fund investors that people tend to think are sitting on the sidelines, but that's a big jump. $500 million or $500 billion in assets is probably not going to happen in the near term. And so we're looking at more like probably a jump of 1 to 2, getting us back to about 1.5, 1.6 trillion.
And is that enough to keep the prime brokerage industry alive?
That's a good question. I think we're going to see some shakeup from the top to bottom in terms of first level and top tier and second tier prime brokers, and the mini primes struggling for business. But over time, I think the industry will still make it out, and we're going to see some more changes going forward.
Great. Well, thank you, and have a great Labor Day weekend.